Hello everyone, welcome back to Sharply's YouTube channel. The Q2 results season is over and in this video we are going to analyze it. More than 4,000 companies have reported their Q2 numbers. And here's the deal. Most of them have struggled on the growth front. Median sales growth across the market was just 6.64% year-on-year, with operating profit growing at 8.75%. But here's the kicker, net profit growth, a flat 0%. Investors are scratching their heads asking what went wrong. Well, after riding a wave of strong margin expansions over the last few quarters, companies are now facing margin compression. PAT margin fell from 10.8% in Q2FY25 to 10.2% this quarter. While this might seem grim, here's a silver lining. Management across industry are hinting at a rebound in the second half of the year. And it's not all bad news. Some industries and even individual stocks managed to shine brightly in this quarter. In today's video, we'll analyze these results, spotlight the sectors that stood out, and share some companies to watch out for in the month ahead. So stick around because later in this video, we will reveal 5 such stocks who outperformed significantly in an overall sluggish economy. Alright, now let's zoom out and look at the bigger picture. While the market performance wasn't very exciting, there's a silver lining. Managements across the board are signaling better days ahead. Most earnings calls emphasize the optimism for the second half of FY25. Why? Several factors. The first is policy tailwinds. Government initiatives, particularly in infrastructure and clean energy, are expected to boost demand. Second, festive season demand. With Diwali and other festivals in H2, sectors like FMCG, retail, and discretionary spendings are likely to see a surge. Third, easing commodity prices. Input costs, particularly in sectors like auto and consumer durables, are showing signs of stabilizing, which should help profitability. Now let's quickly touch on sectoral trends. Here are how the indices performed in Q2FY25. When it comes to Nifty 50, we saw median sale growth of 9.5% and PAT growth at 8.2%. Nifty consumer durables was a star performer with 16% sale growth driven by strong demand of appliances and electronics. On the flip side, Nifty Media struggled with a negative PAT growth of -4.14%, largely due to advertising slowdown. So while Q2 may not have been a blockbuster, it's crucial to recognize the opportunities that could emerge in the coming months. And this brings us to the sectors and stocks that managed to outperform despite the broader slowdown. Now that we have covered that macro pictures, let's drill down into the sectors that managed to shine in an otherwise dull quarter. While the broader market struggled, certain industries delivered impressive numbers and showcased resilience. Let's kick things off with clean energy. Renewable energy continues to be a hot theme, and this quarter was no exception. Companies like Premier Energies, Vari Renewables, Shakti Pumps, and KPI Green Energy posted double-digit sales and profit growth, thanks to rising demand for solar installation and government subsidies in the clean energy space. If you are an investor looking for sustainable growth, this is one sector you don't want to overlook. Next up is defense, a sector that was investors' darling in 2023 and Q1 2024. The sector is again coming into focus due to some major announcements by the government. Standout performers here include Zen Technologies and BEL, both of which reported strong order book growth and expanding margins. The Indian government's push towards self-reliance in defense manufacturing is clearly paying dividends. Data centers and proxies also stood out. Companies like Anant Raj benefited from the ongoing digital transformation wave, with a strong demand for IT infrastructure. This sector, while niche, is growing rapidly and could offer significant opportunities in the years ahead. Now let's talk about a sector we all interact with daily: consumption. Electronics and FMCG saw solid performer like Cellucor Gadget, with capitalized on India's growing appetite for affordable consumer electronics. On the FMCG side, large players struggled while some niche players did well. Electric vehicles continues to make waves as well. Electro Green Tech led the charge, showcasing significant growth driven by the push for electric buses and vehicles across Indian cities. With Mahindra launching new electric vehicles, it will be interesting to see how their business on the EV side grows from there. But here's a sector that surprised many, and that is hospitality. Hotel stocks did really well in Q2. Indian Hotels and Samahi Hotels led the charge in this space. Apart from that, capital markets related companies also did well. And we will look at two of them in the next section. And as you can see, even in a tough quarter, there are pockets of outperformance. But which individual stock outshone their peers and might be worth watching? Stick around, we are getting into those next. Now it's the time to shine the spotlight on some of the most impressive performers of Q2FY25. These companies didn't just deliver, they exceeded expectations, setting themselves apart in an otherwise sluggish quarter. Starting with CDSL, India's leading depository, which had a stellar quarter, their total income grew by 56% year-on-year to 359 crores, while net profits surged by an impressive 49% to 162 crores. Over the half year, consolidated net profit rose by 62% to 296 crores. CDSL added a remarkable 1.2 crore new demat accounts in Q2, bringing the total in India to over 17 crores, a testament to growing market confidence in Indian equities. The company's focus on regulatory compliances and technology upgrades ensures its continued leadership in the digital financial ecosystem. Next, let's talk about Motilal Oswal, a name synonymous with excellence in financial services. In Q2FY25, the company reported an incredible 123% year-on-year rise in PAT to 1,242 crores, achieving an ROE of 48%. Wealth management revenue grew by 53%, while profits surged by 71%. Assets under advice expanded 82% to 5.7 lakh crores. The asset management division also saw AUM surpass 1 lakh crores, driven by strong inflows and a 64% revenue increase. The private wealth business added new clients and significantly grew its AUM to 1.57 lakh crores, reflecting a robust focus on scaling operations. Motilal Oswal's strategic expansion in wealth and asset management is paying off, cementing its leadership in India's growing financial ecosystem. Shakti Pumps is a clean energy champion, delivering a stellar Q2FY25 performance with a fourfold revenue jump to 634.6 crore and PAT surging to 101.4 crore for just 6 crore a year ago. Its robust 1,800 crore order book and focus on solar pumps have energy efficient solutions have positioned it as a key player in both domestic and international markets. With manufacturing facilities capable of producing 5 lakh units annually, Shakti Pumps is well equipped to meet the rising global demand for sustainable energy solutions. Switching to the telecom space, Tejas Networks. Tejas Networks posted its highest ever quarterly revenue of 2,811 crores in Q2FY25, a sharp increase driven by growing demand for 4G and 5G infrastructure. Net profit rose to 275 crores and the company shipped over 30,000 5G-enabled sites this quarter alone. The robust order book positioned Tejas to capitalize on BSNL's 4G expansion and BharatNet Phase 3 projects. With its growing international presence and focus on next-gen telecom solutions, Tejas is a key player in India's digital transformation. Finally, let's talk about ADF Foods, which continues to deliver steady growth. For Q2FY25, standalone revenue grew 29% year-on-year to 125.6 crores, while PAT rose 20.6% to 21.4 crores. Their flagship brand Ashoka saw deeper penetration in domestic and global markets. The US expansion of the truly Indian brand has gained traction, with listing in major retail chain like Whole Foods. Plans to strengthen their quick commerce and modern trade channels are set to drive future growth. So there you have it, the Q2FY25 story. While the broader market faced headwinds, Standout performers like CDSL, Motilal Oswal, Shakti Pumps, Tejas Networks and ADF Foods showed us what resilience and innovation can achieve. As we move into the second half of FY25, all eyes are on sectors poised for recovery and growth. For more such data-driven insights, subscribe to Sharply, your go-to platform for smarter investment decisions. Don't just invest, invest wisely. Till then, see you in the next video.